Joining me right now is the chairman and CEO of Marathon Petroleum, Gary Heminger. Great to see you, Gary.
Morning, Maria.
Thank you so much for joining us this morning.
Thank
Your
you.
thoughts on this move in the price of oil in the last month? I mean, we're talking about bear market territory here.
We are, Maria, and as you can see at the pump, I was just watching your program earlier this morning. We, in fact, have about 22 states that are below $2 a barrel as the price has fallen significantly over the last couple of months.
I know that this could be an indicator of slowdown in global growth. That sometimes is indicative in the price of oil, or maybe it's telling us something only about the oversupply situation. To what do you attribute this sharp sell-off?
I really look at the oversupply situation. If you look at the Permian, continues to grow rapidly. The Bakken has come back strong, as well as the foreign markets, the Middle East production, and the Middle East production coming into the U.S. has put pressure on the supply here in the U.S. And then when you look at Asia, Asia continues to have a slowdown in their economy. And so you look at the supply patterns, how they've changed, and the pressure moving crude oil out of the U.S. We're exporting around 2.5 million barrels per day out of the U.S. to other countries. And then if you look at the moves into Asia as well, out of the Middle East markets especially, that has slowed. So
it's a little of both. You've got an oversupply situation, but you've also got a slowdown happening in Asia. Do you expect a slowdown in the United States within the coming years? This is what's rattling markets right now, growth.
You know, I think the biggest predictor of our economy is the distillate market, because the distillate market, so diesel sales was over-the-road transportation, and you need diesel in order to be able to run the machinery to build things. And diesel is at all-time highs as far as the demand. So I do not see it as a bearish move because of the big demand for diesel.
Characterize what the market looks like. This is a global market for oil, and I know that there's worry about oversupply in the United States. Put it into context in terms of the Saudis. Do we still need to rely on Saudi oil, given the fact that the U.S. is a solid producer at this point?
Well, today the U.S. is still importing nearly half of its needs. Even though our production has grown tremendously, we're still, as a country, importing about half its needs. Some of that is from Canada, but we're still bringing in crude from the Middle East, from Africa, from the North Sea. So, yes, we still are importing, and we still need, as I said earlier, about 50% of our needs coming in from foreign sources.
And let's talk about your business. Back in October, Marathon closed the acquisition of Endeavor. Right. This made your company the largest operator of petroleum refineries in the United States. Marathon operates 16 refineries in the United States. Tell us about this deal in terms of integration and where you see growth happening as a result of it.
Well, the integration has gone very well. We've now been over almost 2.5 months since we've closed this transaction, and we are buying 3 million barrels every day, so the integration has gone very well. As I look at the market, as we talked earlier, with crude prices coming down, that's lowering the cost coming into our refineries. That's been a good thing for both our company. It's been a very good thing for consumers. As you have seen the price of gasoline retreat at the pump.
And on your investor call yesterday, you discussed having conversations with ExxonMobil about some kind of consolidation of at least one pipeline. Can you talk about that?
Right. We have reported that we're looking at a pipeline called the Permian to Gulf Coast pipeline that would go from the Permian area down to near our refinery in Galveston Bay, Texas. But Exxon and Plains have also talked about a pipeline that would go from the Permian over to the eastern part of Texas, and then we could get into other pipelines and go down to the Gulf Coast. So we're looking at the efficiencies of possibly putting this capital project together and building one bigger pipeline that would be more of an industry solution. But we're just in early discussions with Exxon, and we'll see what direction it takes.
So what kind of a partnership would that look like? I mean, would you expect more deals for big oil?
Well, in a pipeline like this, we would call it undivided joint interest, and it's just much more efficient to build one pipeline.
Sure.
And make it bigger, but have it in one trench, and you have one operator. But then you may have several owners that are also shippers on that pipeline. So it could make very good sense. But we also have a fairly good committed pipeline if we can't put this together.
How significant has the rollback in regulations out of Washington this last year and a half been for the oil business?
Well, talking about pipelines, it's been very good. The president and his administration, and through the EPA, we've been able to work and get pipeline permits easier. Now we're still following all of the same environmental rules and regulations we had in the past, but we seem to have really been able to clear the backlog of pipeline permits, especially in the Gulf Coast states.